Welcome to Chapter 12 practice questions from the North Carolina Real Estate Exam. Hey everyone, I'm Sean Kelly and this is my channel on everything real estate. Chapter 12 is on closing a sales transaction and there's about 20 questions that we'll cover here in this video. These questions do come straight from the book. They are not my own as I want to make sure they're 100% accurate, at least accurate in terms of the book. Some of the answers are a little off, but I've mixed up the questions and I'll go over the reasoning on most of the answers. On to the questions. Question 1. The cost of preparing a deed appears as A, debit in the buyer statement, credit in the seller statement, credit in the buyer statement, or D, debit in the seller statement. So just know that a credit means that it goes to a person. Credit is when you receive. So a lot of the questions will come from the closing disclosure where it really divvies out the buyer and seller's fees, right? So it's hard to explain the logic on some of these, but you'll have to know the seller pays to prepare the deed. Therefore, it's a debit on the seller statement because the seller is paying for it. The debit, it's coming out of it. So answer is D, debit in the seller statement. Question 2, the amount of the earnest money deposit appears in buyer's closing statement as a credit, seller's closing statement as a debit, buyer's closing statement as a debit, or the seller's closing statement as a credit. So now the buyer pays the earnest money, right? We know that. At the very beginning, they pay the earnest money and the due diligence. So this is kind of tricky, but it's now a credit on the closing statement because they already paid for it. It's not a debit. The answer here is A. Question 3. Matt is obtaining a mortgage loan of $178,000 at 5.5% interest. Settlement is to occur on the 27th day of the month. How will the interim interest appear in the settlement worksheet? Debits for buyers are on all of these, right? So it's coming from the buyer. So 30 days in a month minus 27 is 4 days because you also count the day that it's on in this case. And remember, there's 30 days in a month in real estate. So you have 27, the 27th, the 28th, 29th, 30th. 4 days, $178,000 times the 5.5% interest gives you $9,790 of annual interest. Divide that by 360 days because 360 days in real estate are in a year. That's $27.19 interest per day. That times 4 is $108.76 debited to the buyer. Buyer has to pay those 4 days. They'll basically own the property for on that month. Answer is C. Question 4. In a residential federally backed mortgage loan for the purchase of a property transaction, RESPA requires all of the following except use of the closing disclosure, a CD, a 3-day right of rescission, a good faith estimate, the providing of the informational booklet, know before you owe. So closing disclosures are always used in every transaction on this, always. So they show your final cost and breakdown of all the fees. A good faith estimate is something the lender is required to give you, and the know before you owe is also a required document. So the answer here is B. The 3-day right of rescission is required under TILA, the Truth in Lending Act. So B is the answer. Question 5. If a property were listed for sale at $130,000 and sold for $128,500, a 6% broker's fee would appear in the seller's statement as a credit of $7,800, debit of $7,700, credit of $77, or debit of $7,800. So the fee comes from the sales price. So right away, know that the answer has to have the $7,710 in it. It's not coming from the what it was listed for. That doesn't matter. It's what it's sold for. The seller has to pay for this, so it's a debit. B is the answer. Sellers pay the realtor fees. Question 6. In a real estate transaction, the buyer obtained a loan in the amount of $160,000. The lending institution charged 1 discount point, which the buyer agreed to pay. The cost of this point appears as a credit to the buyer's statement of $1,600, debit to the seller's statement of $1,600, debit to the buyer's statement of $1,600, or credit to the seller's statement of $1,600. So the buyer here is paying, therefore it's a debit to the buyer. One discount point is 1% of the loan amount. Therefore, C, debit of $1,600 to the buyer. It's easy. The buyer statements usually tell you what the buyer has to pay, and the seller statements usually tell the seller what their fees are and what they need to pay, right? It's not complicated. Question 7. The day of closing is typically charged to the seller, charged to the buyer, split equally between the buyer and the seller. It depends on the type of loan. So this is a very, very vague question. Interim interest is a debit, so a buyer charge. Whatever they're talking about here, though, is A, charge to the seller. But I really don't know what they're talking about. Because even as we saw in a previous answer, you pay the day of closing as the buyer for the interest. So I don't know what they're talking about here. I guess typically it's a seller thing, but sometimes it's a buyer thing. Stupid. Question 8. Provided nothing is written into the contract to the contrary, a wood-destroying insect report will appear on the closing statement as a debit to buyer, credit to seller, credit to buyer, debit to seller, credit to seller only, or debit to buyer only. So a wood-destroying report is an optional inspection a buyer can choose to get if they want to pay for it. The seller has nothing to do with this at all. The debit to buyer, credit to seller stuff, A and B are just ridiculous. You don't need both parties to pay for this and credit each other, whatever. Therefore, it's a debit to the buyer only. D is the answer. This whole section with this debit and credit stuff is just thinking logically. Who pays for what? And you'll get this like right away in your very first deal that you do. You, as the buyer agent, you're setting up the septic inspections, you're setting up the pest inspections and the general inspections. Those things are paid for by the buyer, not the seller. Now, the seller can choose to do those things for whatever reason if they wanted to get ahead of it, but in this market, that doesn't make sense. Question 9. I am out of breath. A duplex is being rented for $600 per unit and is being sold to an investor with closing to be on the 22nd of September. How will the resulting entry appear on the closing worksheet? So you have all these options here: 160 debit, 160 debit, 320 debit, 320 credit. So let's dive into this. So $600 per unit is $1,200 total because it's a duplex. So divide that by 30 days in the month. So $40 times the 8 days remaining in September is $320 going to the buyer. Debit. C is the answer here. So they trick you with that 160 because it is a duplex. There's 2 units in there. So 320, debit the seller, credit the buyer. Question 10. In North Carolina, the closing meeting is typically held at the listing agent's office, the selling agent's office, the attorney's office, or the courthouse. And I'm going to jump straight to this noob question here because this is one that, again, once you do your first transaction, you'll know the answer here. So attorneys conduct the closings here in North Carolina. The banks do it in many other states, like in Texas. You go to the bank to actually do it. Law office here, though. C is the answer. Question 11. The cost of the due diligence fee appears as a credit to the seller and debit to the buyer, debit to the buyer and a credit to the seller, a credit to the buyer and a debit to the seller, or just a debit to the seller. So this is just like the earnest money question that we had previously. The due diligence is paid in the beginning up front. Therefore, it's now a credit to the buyer and goes towards the closing cost. It debits the seller because they got that money up front, but now need to deduct it from their home sales price at the end, right? So C is the answer. Credit to the buyer and a debit to the seller. Question 12. A buyer purchased a rental property and closed the transaction on July 20th. The tenant had paid rent for the month of July in the amount of $600 on July 1st. The rent should be shown as $200 debit to the buyer, $400, $200, $400 debit. Okay, you can see the list there. It's just too much confusion if I read all that off every time, I feel like. So again, $600 divided by 30 days. So that 30 days times the 10 days the buyer actually gets it. That's $200 credit to the buyer. So $200 debit to the seller. C is the answer. Question 13. It is a requirement of TRID that the loan estimate be given to the buyer no later than 3 business days of the date of loan application, date of loan acceptance, due diligence date, or date of closing. So once a buyer talks to lenders and picks one and moves forward, that lender has 3 days to get over a loan estimate. This is so that the buyer can see the fees and decide to switch lenders if they choose, because once you set on one and you go through this whole process, let's say halfway through the closing, you're like, what are all these random fees for? And then, they can add whatever they want on there because you're pretty much locked in. This gives them 3 days to give you that information so that you can still choose and have enough time to pick another lender. So A is the answer here, the date of the loan application, the date that you set to look for a lender. Question 14. A property sold for $151,000. The excise tax on the transaction will appear on the closing worksheet as a $151, $152, $302, or $303. So excise tax is the per $500 thing that we've talked about in previous chapters. So $151,050 divided by $500 is 302.1, but you round up with excise tax. So the answer here is 303, D. Question 15. The cost of recording the deed would appear as a blank on the closing statement. Debit to the buyer, debit to the seller, credit to the buyer, credit to the seller. So recording the deed is on the buying side because it's what makes your side official, right? Therefore, you pay for it. You debit the buyer. Answer is A. Question 16. Which item is always a single-sided entry? Assumed mortgage, sales price, new first mortgage, rental income. I don't get this question at all here, but the answer is C, new first mortgage. Sorry, guys. Question 17. Which expenses are typically prorated between the buyer and the seller on the closing statement? Private mortgage insurance, or PMI, interim interest, commission to an agent, or real property taxes. So prorated is when you typically break something up by the amount of days it's owned by somebody, right? So rent would be an example of that. It's not an answer, but taxes are, and we've already done a few examples. D, real property taxes. The buyer pays for the days they own. The seller pays for the days that they own. Question 18. A property is being sold with settlement set for March 19th. Property taxes for the year are estimated to be $864. How will the resulting entry appear in the settlement worksheet? So you got all your answers there. So here's another example of something we've already done kind of previously. $864 divided by 360 days is $2.40 per day in these taxes. So it's very early in the year here, so the debit to the seller will be low. That's just one way to already think about this. Without even doing the math here, you can already think early in the year the seller only owned the place for a short period of time, so their taxes are going to be lower because the buyer now owns it for the rest of the year. So yeah, the answer here is C, $189 debit the seller and you credit the buyer with that. Question 19. According to TRID, which of the following items would not be considered a required element of a loan application? Borrower's monthly income, borrower's social security number, purchase price, or estimated value of the property. So I'm not sure I'd get this right if I were to find this on an exam without knowing what the answer is already. I'd probably say D because you're applying for a loan based on how much you are planning to pay for that property for. But I guess you can only get approved depending on what the appraisal comes back as at the end of the day. So kind of a weird question, but C here is the answer. Question 20. Ruko is obtaining a mortgage of $243,250 at 5.25% interest rate with settlement to be conducted on June 26th. How will the resulting entry for the interim interest appear on a closing worksheet? Quite a few different numbers here varying throughout 1,000 and less. So with interest, you count the day of closing for the buyer. Therefore, $243,250 times the 5.25% interest is $12,770 yearly interest. That divided by 360 days in a year for real estate is $35.47 per day. That times the 5 days you own, 26, 27, 28, 29, 30 of June, is $177.37 debited to buyer. We are all set with Chapter 12 on sales transactions. Thanks for sticking around. Remember to hit that like button and subscribe as a free way for you to show your support. Up next is Chapter 13 on property valuation. I'll see you on the next one.